I'll share.
Good evening. Today is January 14th, and we had another S&P 500 session that traded roughly in the same range as the last 4 days. As Victor was saying, the infrastructure is finally getting its pay. And today, especially for the most of the day, was a very narrow 10-point range until it finally sold off at the end of the day 20 points and closed on the low. Although the futures right now are slightly gapping up again. Even news that Biden will unveil 1.9 trillion spending package, which is much larger than people expected, including 1,400 checks for people, failed to rally the markets. Nasdaq also tested 1,300 level again and failed to close above it. The winner today was, as usual, Russell 2000, which was up merely 2% today. It's up over 12% from this year's low and up over 129% from the low of last year. It's giving Bitcoin a run for its money. Speaking of which, Bitcoin traded as high as 40,000 today, despite the scary comments by the former head of IMF, who is now the ECB president, Christine Lagarde. She said that Bitcoin has conducted some funny business and some interesting and totally reprehensible money laundering activity. There has to be regulation at a global level, but Bitcoin doesn't care. Bonds, on the other hand, reversed today and sold off, surprisingly. And news that I feel didn't get enough attention today was that France is imposing a nationwide 6 p.m. curfew starting Saturday for at least 15 days to stop coronavirus. It really is incredible that it's happening in France, such severe lockdowns, but it is. And what's also fascinating, how science works, now that we all believe in science, apparently they found out in France that COVID is a nocturnal virus. But, Anyway, Victor, what's your take on all of this?
Well, it's a bull market. Everything's, as Baron Coleman would say, by the way, he was a great salesman, and he founded the health care of America and the health of America, and $2 billion firms. And he started out with a wagon selling goods the way many Jewish peddlers did. Anyway, he'd always say, when you'd ask him, he'd say, everything's up except my Whittler. And today, everything is up except live cattle. Cotton's up, sugar is up, all the stock markets are up. The European markets, German market is up. The grains are so high. I mean, I can't believe it. There's wheat is $6.70 and sugar is $16.70. My friend Jeff Watson is a great surfer and PhD chemist and a man of many talents. Knows the grain market better than anyone. We should interview him, but anyway, everything. I can't believe this. Soybeans at 1,400. Is that what you have?
Let me check.
Soybeans. You know, I'm used to soybeans of $6 a bushel. Now it's $14 a bushel. And so everything's up.
Except inflation.
Well, that's a fake. That there's some ignoramus from, I believe it's the National Bureau, but they follow in the Bureau of Labor Statistics, and they X out all the commodity prices from their inflation numbers. Well, they say, you know, those numbers are ephemeral, but the current futures price on these commodities is the best estimate of where it's going to be in the future. And there's all sorts of hedging and
Right.
it reminds
Soybeans are
me,
at the highest level since 2015.
reminds me of what Elmer Kelton said. He said, you know, when you want to sell something, like if you want to sell soybeans, if you're a farmer and, you know, there's grain elevated, hey, futures have nothing whatsoever to do with the current price. You know, if the spot price, the futures were down, they say, you know, futures are getting killed, you know, there's going to be a tremendous decline. But anyway, the best estimate of inflation is where all these markets are. Everything, the softs, the grains,
Right.
the stocks, the oil. Oil managed to set a 30-day high now. And it's crazy. We're really having inflation. Thank goodness that the bonds are finally reflecting that, and now in the 163 level, they're just a half a point away from their 9-month low. So fortunately, the $1 trillion stimulus didn't force bonds to go up, and usually the bonds had 2 good days from the auction. Now I have a question. Usually the expiration of options is in the stock market is the 3rd Friday of the month. Now the 3rd Friday would be tomorrow.
Right.
But the first Friday was January 1st. It was not
Right.
was not a trading day. Is tomorrow going to be the expiration of the January options?
Yes, I think so.
All right. Well, that's a dynamic in and of itself. Last time the options opened up and got killed during the rest of the day. Of course, the quarterly expiration is very different from the non-quarterly expirations. But hey, we've gone 4 full days without setting a new high in stocks, and tomorrow will be the 5th day, and it's due. In a bull market, they don't like to let X days go without setting a new high. And with all the bad news and everything. And the market's still within 23 points of its all-time high. So I mean, that's after four down days in a row. Last Friday was a down day. Last Monday was a down day. So we've had four down days in a row. The market still only, those four down days have only encompassed 20 full points.
Right.
They tried to knock them hard near the end. That's to shake out the weak longs. We should see the round number at a few times in the next day. What's happening on the woke front?
There's always something good happening every day. For example, CNN's Don Lemon was calling for unity by saying that if you voted for Trump, you're with the Klan, the Nazis, the rioters, the supremacists. So the MSM keeps doing its job to alienate and divide the country. So not much news there.
Well, did you notice that there was a request by the federal government to send in National Guard to protect the Capitol on January 6th, but it was rejected by the Washington mayor who hates police.
Right.
Of course, that one, that information wouldn't be publicized much, but under normal circumstances, like today, like now they have 10,000 National Guardsmen guarding the Capitol.
Isn't the whole inauguration going to be mostly virtual anyway? So I'm not sure why they even care.
Well, I think they want to make the public small. They want to show that things are terrible and that in Trump's wake, the whole customs and everything is bad, and the culture is bad. And I think that's, they want to maintain the image that that the progressives know what's best for the public. The public should just follow along, and they need the protection. So I think that's there was a chance for Biden to take the high road and to pull off all this.
Right.
Apparently, the high road takes him out of his basement, but it certainly didn't take it as far as quelling all the difficulties and all
I wonder if there's a betting site that bets on how long till Kamala is president. That would be interesting to see. I need to look into it. I don't think he's going to serve his full 4 years.
the. Well, what else is going to affect the market?
Well, I just put up a chart on the screen if you want to take a look. It's an interesting indication of the sentiment. All the public is trading penny stocks like crazy with their $600 stimulus checks. And I imagine it's going to be even more once they get the 1,400. The volume for all of those penny stocks is just going bananas. More than 1 trillion shares was traded in December, and I'm sure it's even worse in January now. And it seems like SEC doesn't care about all of this pump and dump that's going on. Elon Musk tweets something about Signal, and all of the penny stock traders are going into a stock with the name Signal, which has nothing to do with what Elon Musk tweeted about. And the stock was up some absurd amounts in one day, and then back and then up again. So there is lots of euphoric retail sentiment going on trading penny stocks. And also there is another interesting chart that S&P 500, or the index, was up 47% in the past 10 months. Only once did it go straight up higher. All other instances, it followed by what he calls a breather. So I wonder if you think those are valid statistics, or...
No, that's fake chart, irregularity that won't repeat. But here's something from the Psychology of Speculation from 1907. When the cats and dogs, that is the poorest and most neglected stocks in the list, begin to advance, it is time for holders of securities to cash in their profits. It might be further observed that when plums get ripe and the melon season is on, it is a sure indication that summer is well advanced. Likewise, when after a long season of bullish anticipation, the stock market plums are being distributed and the melon cutting process is in full swing, when the favorite mystery stocks have disgorged their hidden assets and begin to sell ex-merger and ex-mystery, is a pretty sure sign that the bulls are running short of provender and that the bears are due for their inning. But it may be explained that the mental attitude of a sold-out bull, and that brings me to my favorite grievance against the cognitive bias people. They have all sorts of contrived experiments where they ask students crazy questions, like if you see a student with a slide rule and pimples on his face, who looks very pale, is he more likely to be an engineering student or a humanities student? And supposedly, if you say engineering student, you're subject to cognitive bias because you're not taking account of the a priori effects. But the prior distribution of where humanities students are much more likely than humanities anyways is ridiculous. ridiculous questions they use to prove their that there's a cognitive bias. But there is a real cognitive bias. It may be explained that the mental attitude of a sold-out bull towards a rising market. That's all the people who haven't got into Bitcoin yet, or who sold it when it went to $10,000, and the attitude of a sold-out bull towards a rising market is much the same as that of a bulldog chained in his kennel while a dog fight is going on. A speculator may stand by and view with unruffled complacency the most enormous profits of others in securities that he never owned. But if one of his own pet stocks continues to advance after he is sold out, it is not only reflects the error of his judgment, but the remorse he suffers in contemplating the additional sum he might have made dampens all the pleasure of reflecting upon the profit he actually did make. Are you subject to that cognitive bias?
I'm sure I am. But in trading especially, I think it's a very weird profession, if you want to call it this way, that pretty much every trade could cause a trader tremendous regret. If it went in your favor, you're not leveraged enough. If it went against you, you're leveraged too much. Did you sell too soon? Did you buy too soon? Did you not hold long enough? Did you hold too long? There is no perfection in here. Even in a bull market, sure, it's a bull market. At some point, it may end. And Tesla is a perfect reflection, indication of this. Many people sold before and many people still hold. But who knows if Tesla is Enron in the making, or I don't know, there is no any other analogy, or it really is going to the moon and Elon Musk is going to colonize Mars. But who's to say what's the right thing? What if Tesla gaps down tomorrow 10%? Sure, it's possible, not likely, but possible.
Well, that's what testing is for.
Well, how do you test a stock like Tesla? Testing is great, I think, for the whole market, but a standalone stock like Tesla, it's subject to a slightly different tail risk, don't you think?
No, as we said yesterday, there's always some terrible news, some great fear in the stock market that's equal to the fear that we expect today. But during the last century, the markets managed to go up 50,000-fold and so on. And there's always a stock that's gone up 400 or 500% in the last year. And the question is, can you test that? Well, yes. Gillespie from South Carolina has been buying the stocks that are up the most, and he has one of the best records. And I've posted a very excellent study of trend following in individual stocks, buying the stocks that are up the most, and they do substantially better than the averages. So.
Right, but they're not buying.
You have to test things. You can't go by anecdotal feelings about fear.
Absolutely, but how do you test if your stock is Enron or not? How do you test if Elon Musk is a fraud or not? How do you test if Bitcoin? I mean, Bitcoin alone could gap down 20%. So speaking of this, how do you manage risk? Is there any survival statistic books that you could recommend, or should a person invest 100% in one stock? Like, for example, somebody did invest 100% in Tesla, and now he's a multi-millionaire from 100,000 to multi-millions, and he is never going to sell because he thinks Tesla is going to, I forgot, it's $800 right now. So he said 20,000 or something like that, or 10,000, whatever. So he's
my brother, I asked him what he's he's not a sold out bull. He's been a bull on Bitcoin since it was $5. And he asked him where he thinks it's going. He says $1 million. Thinks that Bitcoin will go to 1 million. But you have to test those things. We're in a bull market. As Partridge said, can't sell things because by the time it's time to buy it back, chances are you'll be a sold out bull. And because there are a lot of sold out bills, stocks that go up the most have tailwinds behind them. So if you wanted to follow a system that has worked for the last 30 years, and including the fact that all the growth stocks have performed better than the value stocks in each of the last 20 years, and like this year there was the NASDAQ was up 40% and the stock market was only up 18%. That's normal, the 20% differential. The growth is what the investor should follow, because the earnings price ratio of a growth stock that continues will eventually be close to the interest rate. We still have, even though the bonds are at a 6 or 7 month low, interest rates are the 10-year is still 1.25%, and 30 years only 2%, compared to the stock market, where you can get a return on capital of 15% that most companies strive for, compared to the 2% of bond holdings. You're much better off buying stocks, and in terms of which stocks to buy, the growth stocks, those are defined as those that have a price to book value and the price to book value is high, then they call it a growth stock. When the price to book value is low, they call it a value stock. Anyway, the growth stocks have outperformed in each of the last 20 years. So if you take all the stocks that are like Tesla over the past 15 years and you bought them, you do a lot better than buying all the stocks like the oil companies. Although the oil companies again will have their day, because every day crude's setting new high after new high. Okay, let's call it a day for today. Should be an exciting day tomorrow. Thank you very much.
Thank you. Have a great day.